Ladies and gentlemen, we are back. Episode 2, Quant Bros. We are going to be talking about why MicroStrategy will trade at a multiple of net asset value. We're going to walk through a few things. We're going to have some fun. I'm not going to do as much Excel this time, so it is what it is, but you're going to learn. I guarantee you that. So we're going to talk about a few things. We're going to go into some game theory. We're going to talk about financial design. We're going to talk about markets, and we're going to talk about ultimately illiquid trades and what price discovery might look like for MicroStrategy. So there'll be a little bit of fun. We'll be a little bit back and forth, and we'll give it a go. So you guys get to see my amazing PowerPoint skills. I've got a Redbreast 12 today, so I'm going to pour myself a little bit of that. Ryan, you got a little beverage too there?
I've got a nice Monster Energy, because let me tell you something, Jeff. Few things in life get me more pumped up on a Saturday night than talking with a good friend about MicroStrategy. So
That's right.
I want uppers, not downers.
Uppers. I hear you. I hear you. And we got Bitcoin. I think just hit 69,690. So got to celebrate that.
It's a good timestamp for history too.
Yeah,
69.
Yeah, perfect. Okay, so without further ado, I'm going to jump into the screen here. We'll just kind of get cooking. Right. Ryan, can you see that?
Yep.
Perfect. Okay, episode 2, here we go. Why will MicroStrategy MSTR trade at a multiple of net asset value? Many of you watched our episode 1. We talked about some crazy numbers, and now we kind of want to get to why. How can it happen? Jeff, you're crazy. Well, I don't think so. And we're going to get into why, and we're going to get real basic here. So this is an exploration into the design of financial markets. As always, none of this is financial advice, right? Anything in this presentation or conversation is not financial advice. This is just a hobby. It's Saturday night. I'm out here doing some research. We're having some conversation, chatting with my friend. And don't ask me what the fucking best allocation between calls and shares and Bitcoin and all of that. I can't help you. But I like to share my research. So here we go. Okay, so getting into MicroStrategy trading multiple of net asset value. For those that watched episode 1, we got into this a little bit. This is the end of our presentation where we got into some examples of what trading at a high net asset value might look like. So over on the left-hand side, you've got the current trading multiple of net assets. I think, MicroStrategy is currently trading around 2 times their net asset value, which is their asset minus their debt. People are going to fight me about this number. The float's wrong. It's off by 300,000 shares. Really, it doesn't matter. It's close enough for government work. And when we're talking about multiples going from 2 to 6 to 10 to 12, the difference between 1.9 and 2.2 means nothing. So don't fight me on that. Don't blast me in the comments. Doesn't matter. So 6 times multiple. Why did I pick 6 times multiple and looking at this? So in the peak in 2021, MicroStrategy hit a 6 times net asset multiple at the beginning of the Bitcoin bull run in 2021. So we kind of want to think of that as maybe a baseline for what the future might hold for the future of MicroStrategy pricing. So looking at different estimated Bitcoin prices here, right? You've got 150,000 all the way up to 1 million. Each one of these scenarios assumes a 6 times trading multiple and backs into a market cap relative to Bitcoin assets on the treasury. So at 150,000 using a 6 times multiple, you're looking at a $9,200 MicroStrategy price. And at $1 million Bitcoin at a 6 times multiple, you're looking at around $66,842 for MSTR. And once again, there's probably many of you saying, Jeff, you're crazy. I don't know what you're talking about, but we're going to get into it. We're going to talk about illiquidity and why this may happen. So getting into agenda. So agenda today, we're going to talk a little bit about game theory, some prisoner's dilemma, crowded and illiquid trades. What does the playing field look like? Who are the players in the game? And what does the field look like? Talk a little bit about GameStop, which is a good example of a small cap illiquid trade, and it's in recent history, so we could think through things a little bit conceptually. And then we'll talk about MicroStrategy dynamics and what the market looks like. So we'll kind of go from there. Go ahead, Ryan.
Yeah, just to hop in on this. One of the things that me and Jeff have been talking about for the past hour and the past couple of days as we've prepped for this episode is that this is really going to be a marathon and not a sprint. And I mean that in a number of different ways. The first being both Jeff and myself have gotten a ton of very, very positive feedback and folks asking for like specific parts of the story. What we're going to do in trying to be artists is paint the picture as best we can in chronological order. And some of that is going to start with talking about abstract things or talking about market dynamics and then talking about the growth of MicroStrategy software business. And we'll tie everything together as we go. But the point here is that we're going to get to everything and it's going to take us some time to get there, which kind of shows our time preference with MicroStrategy. So yeah, I think that was the only top of the line item I had.
Yeah, absolutely. We want to give you guys the tools to start to think like us, right? You know, I've got a degree in economics and I've spent thousands of hours thinking about the game theory of financial markets and how financial markets are designed and structured. And I think if you start to think in that way, you may start to see things a little bit differently, and you may start to invest and trade a little bit differently, understanding the dynamics at play with everybody that's participating in the game. So I think it's a great place to start. Okay, getting into my PowerPoint skills here. Okay, game theory. What is game theory? Right, game theory is a theoretical framework for conceiving social situations among competing players. And how can game theory be applied to the stock market, right? You identify the framework of the game. How can you play a game if you don't even know what the playing field looks like, right? You've got to understand what the framework of the game looks like. And I think that's something that much of the investing community probably doesn't even think about. Like, what is the structure of the entire financial market? And how does that financial market, how is that financial market impacted by different variables? The second component is identify the players that are competing in the game. This is, we live in a capitalist society. There are winners and losers. All of the players have different incentives, different ideas, different designs, different ways of doing business, and they all think of things a little bit differently. And then lastly, if you are able to determine the incentives of the players in the game, you can start to predict the decision-making and the outcomes of the game using those conceptual, that conceptual framework to understand the landscape. So getting into a game theory concept, I wanted to talk about prisoner's dilemma. And this is something that many people have heard of in the prisoner format. But you know, with a business background, I like sharing an example of prisoner's dilemma in relation to business. So on the left-hand side, I've got a Coke versus Pepsi situation, right? In relation to advertising. So you've got Coke and Pepsi. You got Coke at the top, Pepsi on the left-hand side. They have two options. You can advertise or you can not advertise. If both Coke and Pepsi didn't advertise, so don't advertise and don't advertise, both Coke and Pepsi make a profit of, let's say, $5. Now, this is where the dynamics change a little bit, right? If Coca-Cola decides not to advertise and Pepsi decides to advertise, Pepsi makes a profit of $10 and Coke loses 50 cents. So in that scenario, Pepsi wins, Coke loses. Vice versa, right? If Coke decides to advertise and Pepsi decides not to advertise, Coke would profit $10, Pepsi would lose 50 cents. Now, what ends up happening is both have incentive to advertise because they both don't want to lose and they both want to make the most profit. So what ends up happening? Both end up advertising, both spend money on advertising, and neither gains more market share in either situation. So now Coke profit is 50 cents and Pepsi profit is 50 cents. In a perfect world, they would both be better off not advertising, but they all have incentive to cheat the other player in the game. This is called the defection. I love this framework, right? Because if you start to think about this framework and how incentives play into the dynamics of decision making, it really changes your whole framework of the world. I think I said in the last episode, like game theory has ruined my life for better or for worse. Like I think of things just completely differently because of this game theory concept. And Dylan LeClaire posted this, and it was fantastic. I love it. I love Prisoner's Dilemma. I love seeing game theory in the wild. It's just so fun. But this is a nation state Bitcoin prisoner's dilemma, right? If you've got two different nations, nation A and nation B, if both nations don't buy Bitcoin, central banking is unaffected. But if nation A decides to buy Bitcoin and nation B decides not to buy, nation A buys early and gets rich, and nation B is late adopter and poor. Vice versa. Same happens on the alternative side, right? So what ends up happening? Both nations have incentive to buy Bitcoin and probably put it on their treasury. And this concept is a microcosm of what's happening like globally, right? You've got this happening with nations, you've got this happening with corporations, you've got this happening with humans. Like everybody is starting to see the same conceptual theory. And this is like a small example to explain something that's happening on a really big macro level, where you have this A and B become early adopters, but give up monopoly on money. So anything to add there? I just really like this framework. It's just a great way to think through things.
Yeah, I mean the competitive dynamics of this are so real, because if you think about what the prisoner's dilemma is at its core, it's people have an incentive to pursue their own interests without thinking that other people are going to help them in that, meaning the other people are going to be trying to pursue their own interests as well, thus creating the competition. And the dimension of time and how you explain that there, with like the urgency is always to take this action before others, even if not for your own benefit. I mean, of course, that's almost like obvious, right? People want to benefit, but to give yourself a further competitive advantage against your competitors, whether it be, like you said, other companies, other corporations, or whatever it may be. So you kind of have like the force on both sides. You want to advance your own interests while also competing against your competing interests by just getting a better entry point, and thus participating in a better asymmetrical outcome, assuming that people believe in the long-term bullish view of Bitcoin.
Right. All right. It's a great point. It's a great point. Okay. Now that you guys understand prisoner's dilemma, or the kind of incentive structure, let's start to think about the framework of financial markets and kind of the design a little bit. So on the left-hand side, I've got this title, right? Bitcoin is a bit natural. It's very natural in the way it's designed. It's a single asset. It's limited in supply, like many other hard assets on the planet, right? Like land or gold or silver or platinum. And then you have this consistent supply trajectory, which is a formula. It's a formula which is a function of time. And that function of time was built by the Bitcoin framework of the Bitcoin network. So really, it's got this kind of Fibonacci component. And I think that's why a lot of the people are talking about power law. I think power law fits really well when you're thinking about Bitcoin, looking at like a log scale Bitcoin trajectory and how it kind of follows the power law theory.
Especially with the halving component and how that has like an exponential effect to it.
Right. It's all a function of kind of like the supply curve, right?
Right.
It's the supply is decreasing at an increasing rate.
Right.
And then you switch gears and you look at, right, what is the stock market? And the stock market is very crude in its design. It's very like blocky and like big capital pieces. It was established in 1792. There are 55,000 plus companies worldwide. You've got two kind of primary components that are driving the market, being fear and greed. With capitalism is really at the core, right? There are winners and losers. Everybody is trying to get a piece of the excess profit, and that the nature of that design makes the structure of the stock market just fundamentally different than Bitcoin, right? It's there are components of the stock market that are a little bit more blocky, and you could start to see them as you'll see in the next couple of slides. So then we think about, all right, what does the MSTR field look like? Who are the players, right? You've got insiders, you've got institutional investors who are investing on behalf of individuals. You've got very large endowment funds. You've got ETFs, exchange traded funds. You've got private capital. You've got whale retail, so retail with a lot of money. And you've got retail just kind of generally as a whole. And those and anyone internationally that doesn't have Bitcoin spot ETF exposure is using kind of MicroStrategy as a ETF proxy in their they're not 401ks, they call them something else over there, but that's what they're using them. They're allocating assets to MSTR in those accounts. So, and then you think about what is the design, right? You've got restricted traders, which are insiders. They've got to trade at specified intervals. They've got to let the public know. You've got passively managed traders. So those are insurance companies, endowments, pensions, 401ks. These are people that are looking to preserve wealth, and they're generally taking a diversified approach. And then you have active management, which is basically everybody else. So you got a big chunk of players that may not move very much. And then you've got everything else trading at the margin, the active management.
Can I hop in on this slide, Jeff?
Yeah.
And to focus on the players a little bit, you and I talked about this on the prep call. It's that, you know, we can all easily get very lost in the Bitcoin maximalism theory, which I personally subscribe to myself with like Bitcoin on cold storage, which I do myself. But the reality of the human condition is such that that will not work for everyone. Why is that? I'll tell you why. Consumers are used to a level of internet like security that is so friendly to the consumer, meaning I have some accounts on things that like I don't even really know the password. I just by default just go straight to like forgot password. And that, but you get what I mean? Like that level of convenience has become so baked in to the point that there's a jump between that and the responsibility needed to understand hardware and software to take full custody, and also to take the steps to like get on the phone with the folks at like Unchained for your when your time comes to exit so that your family is like taken care of. So a lot of that stuff is not worth the self-sovereignty. And I hate to be the bearer of reality and like insult the maxi community, but that's just reality how I see it. So why am I saying this? The reason is because that makes Bitcoin in an equity form so much more desirable, not only both for Americans, whether it be hedge funds that want number go up, or us who want number go up, or international folks who may or may not have access to the US spot Bitcoin ETF or their local countries Bitcoin ETF to the extent that they have some. And I've been getting a ton of messages about this stuff offline, about people saying that they have trouble all over the place with their brokerage firm, and like what some governments are banning it, some are not. It's very opaque, but MicroStrategy is a vehicle for these folks, you know?
Yeah, absolutely. That's a great point. I mean, self-custody is hard. I mean, I think I mentioned in the last episode,
Yeah.
it's like, it's an exercise worth doing, but only if you're willing and you have the time to be able to sit and consume and figure it out, right? Other than that, it's probably worth other vehicles to getting this exposure. Absolutely. Okay, so moving on to a crowded and illiquid trade. This is a bit of a sensitive word, I think, in the financial markets. I think people hear crowded trade, and it's often connected to volatility or bubbles or you know, bad things, and I think it has kind of a negative connotation. So I want to work through it a little bit and talk about the logistics. So I pulled this definition here. Crowded trade is a situation where you've got a large number of investors that are taking the same position in a particular market or an asset. You've got a significant number of participants that hold the same expectation for the direction of the price of the asset. So for MicroStrategy, if we think Bitcoin is going up, we all think it's going up. Yeah, number go up. And then a crowded trade can result from various factors, such as a popular trend. So think of meme stocks, such as GameStop or AMC, or a widely held consensus view among investors. So Bitcoin is the best asset in the world. When many investors or traders are taking the same position, it could create an imbalance in the market, leading to increased volatility and the potential for a sharp reversal if sentiment shifts. So this is important. Increased volatility and a sharp reversal if sentiment shifts. So increased volatility, the reason there's increased volatility because the trade is getting crowded. There are very few shares that are trading at the margin if everybody is taking the same perspective that I want to hold this for the long term. So that squeezes that compresses the number of shares that are potentially tradable. And this last one here, in some cases, a crowded trade can be an indication of a market bubble or overvaluation. And it's important for investors to monitor crowded trades and assess the risks associated with following the crowd. So a lot to bake in there. And we're going to touch on an example of this, or a crowded small cap trade with GameStop. But I think there's two types here that you really kind of want to think about. Is you got a crowded large cap trade and a crowded small cap trade. And both are kind of fundamentally different. And I'm going to kick it over to Ryan to give it a little explanation.
Yeah, so me and Jeff had this conversation back and forth about crowded versus illiquid, and because when I hear crowded trade, almost every historical context that I've seen that word be used in meant it was the top of something, but that's not at all what Jeff is implying here in terms of crowded. And that's why I offered the word illiquid to really show that this is a small cap stock. There's not that many shares available relative to what the bull case theory is about, this stock one day being valued in the hundreds of billions of dollars, or in like the Mag 7 club, so to speak. And to touch on your point, Jeff, there about small cap versus large cap crowded trade. When we look at something like, and I'll give two quick examples on this, when we look at something like Berkshire and how influential Warren Buffett is and has been in markets, and I've been a disciple of Buffett and Munger for years. And when he takes a position publicly, that in and of itself has like a self-fulfilling prophecy element to it. And we can see that in Apple. He started buying Apple in 2015, I believe, if I'm not mistaken. And also Apple was buying back the stock a ton, which of course, Buffett loved. And the stock roared from there for another solid 7 or 8 years. And it was a large cap tech stock, and everyone knew about it. Everyone had an iPhone at that point. Michael Saylor, by the way, maybe you've heard of him. He wrote a book called The Mobile Wave, which really outlined this stuff in detail before any of these companies were doing buybacks or anything like that. So when we think about something like that, that's my interpretation of a crowded trade, like Apple in that situation. Or even more recent, perhaps more like literally more high flying, is of course Nvidia. I mean, we're talking about a stock that everyone has heard of. Jensen Huang has been all over TV, talked about all the time. Nvidia, the stock itself, gets talked about every single day on CNBC, and it has been for 12 months now, ever since that rally in like Q1 of like 2023, when they ripped through all-time highs. And the stock was only 400 then. I think, it went to over 900. And to me, that's a crowded trade because everyone on planet Earth has heard of it. Some of the doctors that I'm connected with on Twitter have been saying like that their doctor friends, people with money, have been talking about Nvidia at 900 because literally everyone knows about it. And then here's the real problem though with large cap crowded trades. is the base effect math starts to not work at a point, and we're at that point now with Nvidia, meaning, look, I've seen a ton of craziness and anything can happen. Anything can happen. But in terms of thinking about realistic things that could happen, if Nvidia, let's call it roughly at 2 trillion, I know it's like 2.4 or something like that, but let's just call it 2 just to keep it even easier. If Nvidia goes up by a factor of 10 from here, it's at $20 trillion in market cap. Whereas the entire M2 like money stock is, I believe, 22 trillion, or not far off. And anyway, it's in the ballpark because, like I said, we're at 2.4 today. So a 10x would really be 24, $25 trillion. And so, like I said, anything can happen. I've seen and heard the most crazy of things happen, but when we think about what could realistically happen, I just don't see that happening, not for decades, probably plural, just for the GDP to be able to grow that high, to allow the M2 money supply to grow that high. Whereas something like our little old, MicroStrategy, 10xing from here and going to, $200 billion or 220, let's say, to be a little bit more precise, that's totally within the realm of reality. You know what I mean? Both from a base effect math perspective, from that relative size that they'd be in the ranked against the S&P 500 companies that you list. So, and then one other thing, since I'm kind of on the topic, on slide 5, I kind of forgot to mention that the the dynamics of these companies having to compete against each other, or like the nation states on the right having to compete against each other. I was kicking myself for not bringing this up in real time, because this is arguably, the biggest point here is that MicroStrategy has no competition in that sense, right? So think about the thing I just said with the 10xing effect and how that's like realistic. Plus, this company has no conceivable competition. And like I posted about the other day, that window is either closed or it's like, I feel like I'm being conservative and saying like maybe it's closed. Like it's closed, like the window's closed from my perspective. I'm just kind of being conservative and saying like it's closing,
Yeah, 100% agree, right? Anybody that's going to catch them, there's probably 8 to 10 last week that might be able to catch them. Next week, there might be 6 theoretically. In the following week, it might be 2. And you start to look at, all right, well, who has $200 billion of cash on hand or the financial strength to actually pull it off? It's pretty limited. And there might be nations, like the Saudis might, like there might be nation states that can catch them.
Oh, sure, but they don't have a
But
tradable ticker that they're going to lever up with, GigaChad running it. You know what I mean? You know what I mean?
Yeah, 100%.
So yeah,
100%.
real, sorry to bounce around like that.
Yeah.
I just had to get that point out before I forgot, because when you combine, like I said, the fact that it is a realistic scenario, this 10x in kind of like the next handful of years, let's say, so to speak, again, being conservative, versus something like Nvidia, who has competition, by the way, Intel, Taiwan Semi, SMCI, and Nvidia makes none of their own stuff. They import all this stuff from here and there. So I would not say that they share monopolistic, market
Qualities.
dynamic, whereas MicroStrategy does. Plus the base effect math checks out. So yeah, sorry to bounce around, but the monopoly thing, I had to come back to that.
Oh yeah, 100%. 100%. Super important. Okay. So now we got the concept of crowded trades.
Yeah.
We're maybe a little less scared of crowded trades now. We can start to think about them and conceptualize them, and like really it's just a market dynamic that you should be aware of, and how it impacts liquidity. So let's get into an exciting crowded trade that was top of people's mind that everybody knows about, right? Like they made a movie about it, Dumb Money, GameStop. It's a like classic small cap crowded trade. So I want to walk through what happened here, right? So you've got these are all the players. These are I've simplified the players in the game and want to walk through the dynamics just using these kind of like building blocks. So you've got insiders. This money's stuck. Let's just assume this doesn't move. You've got institutions, funds, and hedge funds that are holding this. This is zombie money, right? Like it is It is money that's just staying there. It doesn't even know it holds it. And then you've got private funds, whales, and retail. And so this is smart money. This is smart private capital and dumb money. And then you have kind of like the liquid circulating supply at any one time. And then this entire box here, like all of these together, represents the total shares outstanding. So I kind of want to zoom in on these two pieces here, right? This private funds, whale, and retail, and then the circulating supply. And I want to explain what's going on at the margin. If we just assume everything in red and gray on the left is not moving, everything that's on the right is actually what's impacting the price of the stock. So in zooming in here on the right-hand side, so as you can see here, you've got insiders on the left, made the box much smaller. And you've got institutions and funds, again, made the box much smaller. These boxes are not moving. But then you've got private funds, whales, and retail. And then you've got this like new retail box. So this is kind of the Reddit community. And that new retail box is starting to understand that, oh, the hedges are screwed. And if we just buy the shares and hold on to the shares, we can continue to make the hedge funds get cover their shorts in order to or cover their shorts, which they have to buy the shares, which drives the price up. We're seeing this happen in real time, right? So this new retail box is shifting over, it's expanding, and it's shrinking the circulating supply. So the trade is getting far more illiquid. There are far fewer number of shares that are actually trading at the margin that are determining what the actual price of the stock is. So what happened, right? Yeah, go ahead, right?
Sorry to cut you off. On this one, I would say new retail, and I know you didn't mean this in like any literal sense, but I would just say new retail doesn't mean just like the Reddit folks, because this is part of like the hyperbole case here in terms of MicroStrategy with Saylor like being the face of the operation, is that like when he was at Bitcoin Atlantis there, and you and I talked about this, there might have been people in that audience who didn't own the stock who are now like really reconsidering that. Plus, I think there's also going to be a new hedge fund. So like almost like in this like yellow colored box right here, a new hedge fund flow of capital that could come into MicroStrategy, because
Right.
a lot of these traditional finance guys like Druckenmiller, well, he's kind of the cream of the crop as far as like also kind of understanding Bitcoin, but the traditional finance hedge fund guys who work in like bonds or like, you know what I mean, boring stocks, stuff like that, they're going to see the momentum, not just in price, but people talking about the halvening, people talking about the ETFs where they're buying 10x the daily supply of what the miners are able to like bring to market on a daily basis. They're going to see all this stuff. And the easiest way for them, and I put a post up about this, the easiest way for them to gain exposure to this is either in the ETF or in MicroStrategy. And I think they're going to pick MicroStrategy because of the outperformance, because of like Saylor running the whole operation, because there's no fee to hold it, because there's like a hardcore shareholder base already. You got the short squeeze in place. You got the S&P 500, you know, inclusion hanging out there somewhere in the future. So you got all these things that are just future buying pressure, and it's the best performing Bitcoin related asset over any like realistic period of time. So I mean, it's just win, 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 win. Like it's just check, check, check across the board for why like a new hedge fund, in addition to like why new retail would want to enter.
Yeah. So with MicroStrategy, obviously you've got like all of the pros, right? Like every bull case scenario. And it was a little bit different with GameStop, right? You had your new retail investors, but you also had some smart money that was understanding what was going on. Like there were private capital investors that were on Reddit threads that were using Reddit as alpha to determine to determine where money and velocity was going. So they decided that they saw, right, okay, GameStop went from 4 to 10 to 12 to 16 to 20 to 30. And they said, you know what, I'm going to take a big share on this because there's some velocity here and there's some serious like momentum building on the retail side. So while the movie was called Dumb Money, there was also a bunch of smart money that was betting on what was going on. And so I wanted to walk through the dynamics of what happened kind of in these like really important days here from the 25th of January 2021 to February 2nd. This week was insane for me. So I was in on this trade and I was working through this from a game theory perspective and trying to understand everything. I totally ruined a vacation because it happened while I was on vacation. It was just like awful timing. But you know, I thought I was going to be a quadrillionaire. Anyway, so this big peak happened right on the 27th. I think it hit like 350 or something. And then Robinhood restricted trading on GameStop. And that happened here on the 28th. So we got this like big peak. Everybody wanted to buy more, but you couldn't. The price fell and sentiment kind of broke that day for a day. And then once they turned the buy button back on Robinhood, people continued to buy more shares and it peaked again on Friday. And I remember this Friday vividly because the market closed and I was trying to figure out like, who are the players? What is going on? And obviously there's manipulation. There's dynamics at play that are uncontrollable. And who's in this trade, right? So I basically went back to this prior slide and was like, okay, we've got insiders, they're not moving. Got passive, they're not moving. But you've got a bunch of retail here. Retail is all diamond handing in. And then you've got smart money. And smart money really kind of ruined the smart private capital really kind of ruined this trade. And just that presence alone of smart money, right? We went into a weekend and everybody had to sit with what just happened over the weekend and try to think through what happened. And in understanding the dynamics of the market and that there was smart money at private capital that just got a 500% return in a week.
Right.
The smart money that just got 500% return in a week just made their entire returns for the last 5 years
Right.
with one trade.
Right.
And they have the incentive to exit and in the trade right then because they know that sentiment has been broken amongst the retail traders. And the understanding of where they sit and how they think has to impact how you think as a trader or investor in any of these different like kind of strange market dynamics. And I think when you start to think about MicroStrategy, the dynamic and the underlying ethos that's sitting below this is like much greater than some momentum that occurred on Reddit, right? We're talking about a company with the largest Bitcoin stash in the world. So the dynamics are a bit different. Yeah, go ahead.
Mind if I hop in on that one?
Yeah.
So a couple things here. Like I was also involved in the GameStop trade. I wish I would have known Jeff back then. It would have been nice to have like a fellow soldier in the trenches. But there's a couple big things here. Number one, no one in the GameStop trade thought that GameStop was anything. You know what I mean? Like everyone knew the underlying business was really a nothing burger of just retail stores and nothing. It was just so exclusively on the short squeeze dynamics and also how high profile the short sellers appeared to be, right? So that's like number one. Big distinction between MicroStrategy and GameStop here is that like MicroStrategy, like in my belief, again, nothing we say is financial advice, but in my perception, like MicroStrategy is in the early innings of being like a well understood monopoly. I wish I would have said that smoother. It would have been a nice soundbite. Anyway, moving on.
Yeah.
The other, or no, real quick,
Oh, yeah.
one other point on that slide. The other big thing here that is like so crucial to drive home that's different about GameStop and MicroStrategy is that there was a perfect storm of events with GameStop that allowed Vlad to even have the optionality of turning off the buy button, meaning it was and like we said earlier, I don't have like data on this, but this is just one of those things you kind of just know. the concentration of people buying GameStop was so highly concentrated in Robinhood that would have even allowed for such a sizable like market impact, which they got successfully. And again, I don't want to talk about that stuff because it was like massively corrupt, obviously market manipulation. I can't believe they got away with any of this stuff, but the House tends to get away with that stuff. But the point here is that that could not happen to MicroStrategy because number one, it is in the early innings phase of like, being a monopoly. And number two, it's so well distributed across all the brokerages. And it's not just like a US only phenomena, you know what I mean? Especially because Saylor's videos are being translated into other languages and he's really kind of living up to this rock star persona. You got a real, business leader trying to save the world, who Ryan Cohen, great guy, but he wasn't trying to save the world. So you got the business leader, it's a real business in the early innings of being a monopoly, and there's just no way the market could shut this down. You know what I mean? So
Yeah.
that's kind of the couple big things with the GameStop comparison.
Yeah. And GameStop wasn't part of the S&P 500, nor were they going to be.
Nor was that right, nor was that
Nor were they going to be.
ever part of the story, ever.
Right. Right. Uh, now, the index funds did have an impact, but it was it's a much more muted impact on the whole trade.
Right.
So, what happened here, right? Like sentiment broke, right? Previously, this exhibit, you would see that the circulating supply was, this very tight corridor of liquidity. Now, the smart money exited the trade, and now liquidity quadrupled. And so, with the increase of liquidity, that meant volatility to the downside, and the price of the stock fell, and it fell pretty rapidly. And then it kind of bounced back up a little bit here and there because I think there were some shorts that were covering positions, and maybe not all of them are covered, but the momentum of the trade is gone, and I think it would be incredibly difficult for it to come back. I'm not saying it's dead completely, but I think it would be challenging for something to that magnitude to happen again.
It felt dead on arrival when it happened. And again, that's just such a monumental type thing. That's like once in a century type stuff, what we saw with that shutdown. And there's just no conceivable way to me that could happen with MicroStrategy. Like there's just no.
Yeah. And part of this GameStop was this kind of greater fool theory, right? You kind of had to,
Totally.
There was a little bit of a concept of, you just had to convince one more person to make the trade, and then that makes the trade even more valuable, and they have to convince one more person to make the trade.
Yeah, and that's actual greater fool theory. So when Jamie Dimon or some of these other people who I'm not necessarily a fan of, to put it lightly, when they say things like Bitcoin is greater fool theory, it's like you could say that about any stock.
Anything.
You know what I mean? You could say that about gold. You could say that about literally anything. But however, GameStop literally was greater fool theory, and no one knew how long the squeeze was going to go on. But the shutting off of the buy button was like,
Yeah.
It just felt like game over.
There wasn't a really true valuation of the stock, right? Like it wasn't like what we're trying to do right now is we're trying to put a value, like we're trying to like fundamentally and rationally assign a value to MicroStrategy, which is just a phenomenal concept. Like it's crazy because there's no other company like this before. So it's just so fun. But with GameStop, it wasn't really what is the company worth? It's like, so, fuck the hedge funds. That's pretty much what it came down to. So, it's just a different kind Okay, small cap crowded trades. Let's get into MicroStrategy, shall we? Let's look at MSTR, which is kind of fun. Okay, so who are the players? This is from the NASDAQ website. Again, there are data discrepancies all over the place. We have included a link here. This is the NASDAQ website link. We're just taking the NASDAQ as the Bible of like the base data. And, people can argue about that however much they want. But, right. So institutional ownership, you can look this up. This is in the last quarter. So every quarter, any institutional owner that manages over $100 million needs to file a 13F form with the SEC. So that indicates how many shares of any equity that they're purchasing within their fund. So over the last quarter, so this is data as of 12/30/2023, institutional owners increased their positions. There were 245 institutional owners that increased positions, and there were 76 institutional owners that decreased positions. So you've got a net delta there of like a new $1.1 million of increased shares purchased by institutions. Again, this data is dated. This is as of 12/31/23. I am super looking forward to when the data comes out for end of Q1. Oh, you're on mute.
This is a quarterly thing, right?
Quarterly. I think it's quarterly. Pretty sure it's quarterly. Okay, so let's get into some of the institutional ownership. I'm going to pop over to Excel here because you guys like Excel. And here's my Excel spreadsheet.
It's fun.
master.
Excel's fun because it's dynamic. You can change a couple numbers and see things change. You know what I mean?
Yeah, absolutely. Okay, so this is institutional owners. This is directly from the NASDAQ website. You can see there are a lot of institutional owners here. Anybody can go look and download this data. I just had to copy paste it. There wasn't like an Excel download or anything. But just a couple that I wanted to point out. I've got some highlighted here that are really interesting. The first one being Capital International Investors. We're going to try to reach out to this company and see if we can get to talk to somebody. I think the executive committee, their last name is long, which is just a hilarious, like so topical last name for anybody an institutional investor. But if anybody wants to do a book report or some research on Capital International Investors, that would be great. We would love some feedback on any of these institutional investors just to get an understanding of what they're doing. But Capital International Investors holds 1.5 million shares. It's relatively flat quarter over quarter. Obviously, you've got BlackRock in here. BlackRock's a big name that comes up quite a bit. Vanguard, pretty funny. They're not allowing Bitcoin ETFs, but Vanguard does hold 1.1 million shares of MicroStrategy. Again, I think with the ETF, the total stock market ETF and the other exchange traded funds that MicroStrategy is in, those shares are being represented here as Vanguard holdings. So this is not Vanguard going out and saying, we want to buy MicroStrategy. This is shares that are purchased via their vehicles and being represented in this report. You have something there, Ryan?
Yeah, two quick things. That would be like the Russell small cap, I would imagine, ETF,
Russell,
which
yep.
has to buy it. It's not them like wanting to own it, to your point.
Yeah.
And the thing I was gonna say too, like when you look at these top three here, being over 1 million shares, and I know this is one of the metrics that gets kind of debated, and even just the MSTR bull community, like the shares outstanding number gets debated because some people are pricing in all the converts and everything else like that in the future to now, and we can debate the merits of stuff like that, but even if we take like the most like fully diluted number possible, which would be like in the 20 million range, these folks own 5% on the most fully diluted way of interpreting the company today, on today's Bitcoin price, not on a future Bitcoin price. So I think that's pretty remarkable that you got BlackRock owning 5%. Like that feels like a pretty stable anchor. You know what I mean? Ditto for Vanguard, and like you said, we'll look into Capital International.
Yeah, we'll check it out. Some others that are interesting, and just looking at this list of institutional owners, Citigroup, they added 32,000 shares in Q4 of 23. So it's a 1,000% increase. It looks like previously they added about 3,000 shares. That's probably not ETFs, I would assume. Any drastic jumps like that you see quarter over quarter, that's probably some ETF change and then some strategy surrounding a MicroStrategy play, I would assume.
I don't think they do any ETFs, do they?
I'm not 100% sure. What they may buy ETFs on behalf of their investors. They don't write the ETFs, I don't think, but they may buy them on behalf of investors, maybe. I don't know. That's a good question.
Yeah, and to be honest, I don't know to what extent that they run some type of like hedge fund. Like some of that is like opaque to me, like which Wall Street bank also, like Goldman Sachs, of course, has a couple different funds running all the time with like different people mixed between the two of them. I don't know if
Right.
Citigroup does that, and I'm not sure about the ETF thing either.
Yeah. It's pretty, while this is supposed to be transparent, it's still really opaque.
Yeah,
You know,
yeah,
like you
very.
don't like there's so many questions I have and I can never get the answers to them. But you've got Swiss National Bank. I thought that was a funny one. They've got 23,000 shares. This company just purchased 19,000 shares out of nowhere. That's brand new investor. Fora Capital, 15,000 shares out of nowhere. California State Teachers Retirement System, State of Wisconsin Investment Board, Bank of Montreal, Canada, State of New Jersey Common Pension Fund. I mean,
Jersey.
yeah, talk about institutional investors that probably aren't going anywhere, right? They're probably taking a horizon on these trades that are well beyond just a retail trader of 24 months or anything like that. They're probably taking thinking about the duration of their liabilities on their portfolio and when their pensions come due and how that plays relative to the assets and their liabilities and all of that stuff. So some good information out there. It's worth checking out, right? It's the you can follow how this is changing over time, and you can see like who's going in, who's going out, things like that. The one caveat to this, and going back to the definition, is that this is representation of institutions defined as firms or individuals that exercise investment discretion over the assets of others, in excess of 100 million. So this will not represent private capital. So if there are family funds or like private equity that isn't representing the assets of others, but maybe representing the assets of themselves, they would not be included. And I don't think they're subject to these 13F filings. So this isn't everybody, but it gives you a lens into the stuff that probably isn't going to move too much. Okay, so let's do the same kind of like building block analysis with MicroStrategy and what that might look like. 17.3 million shares split amongst many hodlers. Again, you guys are going to roast me for having the wrong share number. It doesn't matter. It's just a block of shares. It's small. The number is small. I think Apple has like 14 billion shares tradable. So do the math. Like it's tiny. And the difference between 17.3 million and 20 million doesn't fucking matter. So let's go to the next slide here. This is the playing field. And we could think about, so you've got Saylor, right? He owns about 14% of the shares outstanding. He's got about, or Saylor and all of the execs have about 2.5 million. So you got to think about their incentives, right? Like Saylor wants to change the world. He's also, if he holds on to his shares, he's probably going to be the wealthiest man on the planet. He probably doesn't have incentive to sell shares. And you guys may argue with me on that because he is selling 5,000 shares a day right now, which is a function of an option grant he was given in 2014. I think it's really important to point this out. That option grant that he was given in 2014, he explained his strategy in the Q3 earnings call in 2023. I thought the strategy in selling 5,000 shares a day was incredibly strategic, right? He could have dumped all of that liquidity in a single day, but he didn't because he knows that he also owns 2.5 million shares. So he spread that out over a time horizon, and any profits that he's making from that share sale, he's turning around and smash buying Bitcoin on the other side, which is improving it's just like he's smash buying Bitcoin, and that actually improves the value of the other MicroStrategy shares that he holds. So it was kind of a nothing burger to me, the fact that he was selling shares. In fact, I think other execs have sold shares. I don't really care. Think about how orange pilled they are. They work with Michael Saylor. Like, can you imagine like the conviction you'd have after sitting by this guy like every day? It'd be insane. Go ahead.
And then, yeah, just one quick thing to hop on here. I've looked into this stuff a ton. I've never found evidence of Saylor selling his core equity position, like from his entire, 30-ish years on the public market. what Jeff just explained was the option contract that was awarded about 10 years ago, give or take. And I think absent Bitcoin existing, I don't even think he would have exercised the option, because it would have been the phenomena of moving money from your left pocket to your right pocket when you own so much of the stock already. But because he wants to diversify at least some more to just personally stack Bitcoin in his personal account, it makes a ton of sense, and it was well communicated ahead of time, and the share sales were spread out. But the point I really want to drive home there is, like, I have no evidence that Saylor has ever sold from his core equity position that he had since the IPO, meaning there's no evidence to suggest that he would
He
start
would in the future.
selling in the
Yeah.
future. This is the founder, like, he started this company, you know what I mean, before I was born. He started
Yeah.
this in 89. I was born in 92. So I think he wants to see this journey through, you know,
Yeah.
get into the
Right.
S&P 500, ring the bell. Like, I think he wants to see the whole process through.
Right. And that's how wealthy people get wealthy.
Right, right.
Like look at Elon or any other like of the top companies. They hold a massive number of shares.
They didn't get rich from selling, they got rich from waiting.
They got rich from waiting. Yeah, that's the classic wealthy people thing. Yeah, you don't get rich from selling assets. You get rich from. I think Michael Saylor has said that himself.
Yeah.
Like wealthy people don't get rich from selling their high value real estate. They get rich from holding their high value real estate.
Yeah, him and Charlie Munger, same thing.
Yeah, yeah. Anyway, so you got Saylor, right? He's not selling. We're making the assumption he's not selling. You've got all of these institutions, passive funds, endowments. This is the same as the GameStop, right? Like they're the gray box. They're not moving. They're zombies. They're passive. Then you've got the private funds, whales, and retail. Their incentive is to build generational wealth and win the game. And also, where else would you put your money? If you understand the structures of the financial systems, both Bitcoin and MicroStrategy, and if you feel comfortable with your core Bitcoin stash via self-custody or whatever, then these are the vehicles that you can choose from. So in this circumstance, right, you've got your circulating supply at any one time. This is what's liquid. So let's take this to the next step, right? We've got some talk here about new investors, right? New people are coming in the door, potential S&P 500 inclusion. You've got QQQ, potential NASDAQ 100 inclusion, rolling from the Russell 2000 to the Russell 1000. You've got VTI, which is a total stock market index fund. You've got a bunch of passive investment that is potentially on the horizon. And that passive investment needs to purchase the circulating supply. And so as they start to purchase the circulating supply, kind of what's liquid at any one time right now, depending on the strategy of all of the other players in the game, this starts to compress the remaining supply that's liquid. So again, similar to what we did with GameStop, we're zooming in here, right? We've got Saylor and the executives over on the left-hand side. You got institutions over on the left-hand side. They own a majority. Now you've got private funds, whale and retail, and you've got the circulating supply at any one time. You've got these new investors. All right, those new investors are going to chase that circulating supply. And shifting to this next slide, you could see that as these new investors, this new retail and this new passive investment comes into the trade, it compresses the remaining circulating supply. If everybody else here is hodling, you got Saylor, the institutions, and you got the private funds, right? If Bitcoin is on, it hasn't hit its bull market. We haven't even hit the halving yet. So like, why would anybody sell? We haven't even hit the Bitcoin halving yet. And we think the price is going to go to 1 million, or if you're taking a 10-year time horizon, maybe it goes to 10 million. So if I want to see what the company does in the future, I have no incentive to sell at all. So my shares are not going into this circulating supply bucket. And any new retail and new passive investment that comes into the trade is compressing that circulating supply. So let's just look at it from back to back. You've got a lot of circulating supply, and the circulating supply is starting to get compressed, right? So now, as any new investors come into the trade, or new like S&P 500 funds or QQQ funds, now they are chasing a much smaller amount of the circulating supply. So the liquidity of the shares that are available is getting compressed. This is kind of the stock float compression theory. Like this was my whole thing. The the liquidity is getting compressed. And so the compressed supply, like whatever's remaining there, is what determines the price of the stock at the margin. So the reason I'm fascinated with the order book is because the depth of the order book effectively shows you like the liquidity. And as the price changes or the remaining supply changes, that liquidity gets to, it gets compressed. So now let's go to the extreme scenario. What if there is no more liquid supply? And yet you still have all of these new passive investors, this index ETF funds that need to buy the stock. Where do they go? They have to go to everybody else that's holding the stock and convince them to sell, right? I've got this box here. Can we please buy your shares? We'll pay you a lot, I promise. Well, guess what? You can't have my shares because they're worth way more than you're willing to pay me. And many people are likely taking that strategy. It's funny. People are like, Jeff, what do you think the actual number is going to? I'm like, I don't really know, and I don't really care. It's a continuum, as it's a function of what the underlying Bitcoin price is, and it's a continuum of potential prices. Now, what may happen here is the new passive investors might have to go to Saylor and say, Saylor, can you issue more shares to us? We need to buy. And he may say yes or no and issue more shares, but you got to pay this premium. And the premium that we're going to charge is maybe 6 times our net asset value or 10 times our net asset value. And this starts to get compounded more and more and more. And this gets to the flywheel where the whole thing just starts spinning really fast. And you have the short squeeze compression here, where anybody that's short has got to find people to buy shares from in order to close their positions. And when there's no more liquidity, or the liquidity is really low, that is how things start to run away. If there's a very thin number of shares trading at the margin, because everyone has incentive to hold when Bitcoin is going on a tear. And then we talk about like manipulation potential, right? And this isn't the GameStop manipulation. We're talking about the 9th largest asset in the globe being Bitcoin, underpinning the entire trade. They hold more Bitcoin than any other company in the entire globe, and are likely going to continue to hold that monopoly position unless anybody literally starts buying yesterday to try and catch them. So do we think the Bitcoin sentiment can be broken? So obviously the Bitcoin sentiment is underlying MicroStrategy trade, whereas again, GameStop, the sentiment was, let's screw the hedge funds. I'm not saying there are not risks to trading and investing in MicroStrategies. Sure. There are hundreds of risks. I'm not going to outline them here today. That is a future episode that we're going to try to weave some of this stuff in, but go look at their 10K. I think there's 15 pages of what the potential risks are, right? You've got like, stuff can happen to Bitcoin. You've got EMPs, you've got custodian, you've got main man risk. Like there are plenty of risks. Interest rate risk. There's just so many different components that play into this. It gets tricky. So I'm not saying there are no risks, right. But what I do know about Bitcoiners is that you are not going to change a Bitcoiner's mind. A Bitcoiner is a Bitcoiner, and a Bitcoiner is going to be a Bitcoiner for life. And it's kind of a crazy phenomenon. And I don't think I've ever met a single Bitcoiner that's like a true Bitcoiner, not like somebody that's gone on the Bitcoin arc and then gone to shit coins and then now they're back to Bitcoin. But like a true Bitcoiner, I don't think I've ever met one that's like changed their mind and not or decided that they wanted fiat or altcoins instead. I mean, there is no second best, right? Like there is no second best. That's just it. Bitcoin is it. And I think that's a pretty phenomenally hard sentiment to break. And everybody that's playing the game also knows that. So again, let's go back to the whole multiple on net asset value. Do I think this will trade at a multiple on net asset value? Absolutely, because the the fundamental design of the stock market is built such that there's going to be these passive flows that are flying into this and they don't even know that they own it. And you've got like all of these different dynamics with, and Ryan, we were talking about this like before we started this call, like it seems like all of this is happening at the same time.
Right.
Right. Like you've got potential index inclusion probably this year. You've got MicroStrategy is now fully in the black on 100% of their purchases. I think their cost base is like 32,000 for their stack, and I don't think it's ever going to go. I don't think we're ever going. We're not. I can't say it with 100% confidence, but I'm like 99.9% sure we're never going to see 32,000 ever again. And yeah, it seems, and you've got the short, and we get into the short squeeze on the next slide, which is a good segue.
Do you mind if we bump up one? I wanna double no, the safety slide. I want to double tap on a couple of your points here. I agree with everything you said, and to stress that like traditional finance folks notice this conviction that Jeff talked about, because that was one of the real things that got me into Bitcoin was not just reading Safety's books and listening to Saylor, but seeing anonymous people on Twitter saying like, yeah, I just bought Bitcoin and like my kids are gonna own it. You know what I mean? Like I'm long this thing and I'm never gonna not be long this thing. And this phenomenon was noticed by traditional finance managers, Paul Tudor Jones and Stanley Druckenmiller. And I've shared this anecdote and I'll end up resharing it in the future because I love it so much. But hedge funds and billionaire type friends, of course, talk to each other frequently, kind of in the way that me and Jeff talk to each other about ideas and strategy and like, what are your thoughts on this and wanting to share feedback. And Paul Tudor Jones called Stanley Druckenmiller and he goes, hey, Stan, did you know that 86% of the people who bought in the $17,000 to $20,000 range at the top in forgive me on the month, it was in 2017, the year 2017, I believe it was November was the absolute top. It might have been early December, but he said 86% of the people that bought between 17,000 and the tippy top of 20,000 in 2017, 86% of them did not sell at 3,000. And you know, Druckenmiller interpreted that as just a huge sign of conviction because just, you know, what year was that? 2017. So just 15 years prior to that, in 2022, he had just, you know, went through the 95% decline in the NASDAQ index, where he saw countless, don't quote, it was somewhere between 90 to 95% decline on the NASDAQ index. And he had seen many great investors get wiped out on both the move up, the value guys who were shorting tech stocks, and then the decline down, the guys who were long tech stocks. And so he said for him that gave him a ton of conviction. And yeah, of course, I've never met a hardcore safety and Saylor type Bitcoiner that's ever like pivoted their ways or somehow stopped caring. And this picture here on safety has really always spoken to me. Not the picture itself, the real tough safety and with like the serious face, but the quote. And I think I heard him say this quote in 2018. So the dates, he had said this in the past before, but anyway, this speaks to the game theory concept. Like to take it back to the top for a second, this is, you don't even have to switch slides, but just thinking back and like what we said at the top about game theory, I mean, this hammers the point home so directly about, you know, the soldiers fighting in wars over history and how each technological advance was either adopted or that person lost because the other country adopted it and then dominated them with that, whether it be bows and arrows or bullets or M4 like carbine rifles and then tanks and then all these other like disastrous weapons that we have. So it really hits home on the game theory. And then if you feel free to hop in if you had anything, but I'm ready for the next slide if you are.
Yeah, and maybe we'll pull it all back at the very end and go back to the very beginning slide where we show the kind of MSTR prices. But like
I do have
Bitcoin,
to do that for interest rates, by the way. So yeah.
yeah, but like Bitcoin itself is also a crowded trade, right? Like,
Right.
and I think it's helpful to think about it that way because the remaining supply, like I know I've seen a ton of these images come through on the Twitter where you see like supply on exchanges hits like 5-year low. Um, that's it. That's the crowded trade, right? Like the supply, the circulating supply that's available to be traded is dwindling. And you have a bunch of people that are rushing in to buy what's remaining circulating supply.
Right.
And then you have, like you said, that 80 or 90% of people that have held this for a long time and they haven't sold and they're not selling. Some will sell to their lifestyle and will become what they want it to be, and will sell off periodically to maintain or grow their lifestyle.
Trim a little bit, yeah.
But like at the end of the day, you've got 8 billion people
Right. Right.
chasing 21 million coins,
Right.
and then if you just do a simple math, it's 0.0021 coins or something like that. It's like incredibly small.
Now run that number for the amount of millionaires that they are. It's
Yeah,
incredibly small quickly.
right. And you start to factor in like lost coins, Satoshi wallet,
Right.
all these big companies that hold all like Saylor that holds 193,000. It's like, well, that's some that the 8 billion people on the planet are going to be able to hold either. So you really like it's actually far less if you equally distribute it.
Yeah, Doc thinks BlackRock might get to 1 million this year. Talk about, illiquid.
Yeah, super. So it's like it's a crowded trade on a crowded trade with financial, like a synthetic financial design and passive investment that's buying it and you don't even know it. So it's like this exponential like explosion of price discovery, which is like it's super incredibly challenging to quantify and like put a rational number on it. But man, it's fun.
Yeah.
Okay, let's talk short interest.
Yeah, and that was actually a great setup right there. It was organic and it works out because what Jeff was saying right there was talking about this major confluence of events that we seem to have coming up at some unknown point in the future. And the two things I'm going to focus on, of which there are many catalysts that we could focus on, but the two that I'm going to touch on now is the combination of the short interest dynamics with S&P inclusion. I mean, based off just looking at this chart on the left, and you can see I've shared and I've tweeted about this stuff, but just to kind of unpack it a little bit, the short interest has really been hanging up in this 3 million range for some time now. And if you look at where the big spike kind of happened in 2022, Jeff, if you can just like line your mouse up with the up a little bit, like that vertical leap was at a much lower price than what MicroStrategy is today. And this is the post that I've shared about where it's like it's not can you read the music, Robert? It's can you hear the music from the Oppenheimer quote where I can see the peak in Google trends for searches for MSTR overlays perfectly with the institutional buying and selling. I'm sure you've seen this on my stuff over the weeks, months. If not, it'll be reshared. But that lines up, so the Google search trends lines up perfectly with the institutional sales, which lines up perfectly with the volume of shares traded for MicroStrategy, all directly in this Q2 of 2022, that big jump, the rectangle that Jeff just added in there. And again, that's at a price point that's materially less than where we're at now. A lot of those short orders got filled at like 150, 160, $170. That was in the June of 2022 Black Monday for Bitcoin, where there was a 20% drop through that weekend. So look,
So Q2 of 2022 is trading in the 400s, 200s. I mean, there was a big drop there
you see that
from,
one big candle, and it's got a long wick where the
yeah,
line comes in.
super long. Yeah, this is in like April, May, end of April, early May, when it dropped from 400 down to 200 pretty quickly.
And just to
Yeah,
wrap this point up, so we can see, like, look, the shares outstanding has been hanging above this 300 million number for some, or no, I'm
3
sorry,
million, 3
get
million.
the numbers right. We're talking about numbers, we're talking about shares. The MicroStrategy short interest has been hanging above 3 million shares for some time now. Most of these folks entered in at a price that is way less than it is now. And some people have been talking about how the short interest should be adjusted for the increase in shares outstanding. The reason why I don't subscribe to that school of thought is because I think the most important metric is the total dollar short. So if we look at just back of the envelope math, if we look at 3 million shares are sold short times $1,400 a share price, that means $4.2 billion worth of USD value. I don't know if you're checking me on the math there, but that always
I am.
helps.
Yeah, yeah, 4.2 billion. Yeah.
So
Yeah.
confirmed, there is $4.2 billion worth of MicroStrategy short equity positions just hanging out there. And here's where the confluence of factors comes in. I think in the event that these folks don't cover their positions, they're going to be met with the ultimate steamroller of all steamrollers, which is the people who buy stocks with other people's money, which is Jeff's, passive index thing, where these are guaranteed buyers of the equity. And here's where part of the reflexive flywheel comes in, is that as MicroStrategy's market cap goes higher and higher, thus also goes higher their percentage weighting in the S&P 500, in the NASDAQ 100, and these other indexes that are on the horizon for MicroStrategy to get in. It doesn't seem like it's a matter of if, it just seems like it's a matter of when. And I think we're going to have these two catalysts really driving in tandem off of each other, both the short squeeze and then the future, S&P inclusion.
Yeah, yeah, absolutely. I mean, I've been doing the updates every day on the market cap update, and
I
I think
love
they're
that.
I think they're at like at 353. Is that the last number? I don't remember the exact last number they're at. I think they're somewhere in there, but they're in the 300s already. I mean, they just skipped everybody in the 400. It jumped 76 companies this week in terms of market
Yeah.
cap size, and doesn't seem like it's slowing down. And you've got the bull scenario of Bitcoin playing out underneath it. So, um,
That's
yeah.
that's what's really, and I love your posts on this. And the thing that really jumped out to me is how many companies it swings.
Oh yeah.
I
Yeah.
mean, it jumps 30, 40 companies a day easily,
Yeah.
you
And
know?
I think the really fascinating thing is who the hell are the other companies around them?
I know. Half of these I've never heard of, and I've been studying markets for 6 years now. And
Yeah.
this isn't some junk index. This is the best index in the world, the S&P 500, and more than half the companies I feel like I've never heard of.
Yeah, right.
You
And
know?
it'll probably be like that for another 150 companies before you start seeing kind of some name brand names. I think a couple on the horizon are like Best Buy, eBay, Delta Airlines. I think we'll probably see those within the next couple of weeks. I would think, um, and that's I think those are probably good milestones for rationality checkpoints.
And real quick, before we go to the next slide, like when you compare something like MicroStrategy to like Delta Airlines, like I hate the airlines. That should be the most least investable like business industry that there is, because their capex insane. It takes 100 days to service an aircraft. You have to pay a fortune in fuel. It's so non-linear, meaning the only way that you can drive revenues in the airlines is by putting more planes in the sky, right? This isn't the early days of Google where 500 engineers could build a search engine that everyone in the world with internet access uses. That's a dominant, like non-linear, like outcome waiting to happen, all with software margins. These guys in the airlines, they have no margin. They have no way of increasing margin. They have no way of increasing revenue. You know what I mean? Like
Yeah. It's
it,
like,
and it's so competitive too. You got
yeah,
Delta, United, Southwest, all these other airlines all competing with each other.
but they're also too big to fail.
That is the thing. They have become like a nationalized like public utility almost, but just to compare placement in this list of companies by market cap, it's like you could so easily see like more northward progression.
Yeah.
Yeah.
Well, yeah, getting back to one of the I think really good points from the first episode was the carry cost of the assets, right? Like
Yeah, that's what I forgot. Yeah,
the carry value of the assets, where like what does it cost to hold Bitcoin? Guess what? They don't have to buy a warehouse to hold it.
yeah.
You know, like yeah, they're paying custodians like whatever, some basis points of holding their Bitcoin, but there's no decay, right? They don't have to rebuild buildings or rebuild planes. There's no lifespan.
They don't have to
And
buy, they don't have to buy fuel. They don't pay that many people. They only have about 1,900 employees. You know what I
there's no
mean?
variable
Very
cost. Yeah.
it's very lean. The 78% gross profit margins, like it's very lean personnel wise, and they don't have any number of these expenses like taxes to hodl. There's no real like real estate costs. They're not buying like mass buyers of energy. They don't send an airplane to the hangar for
Yeah.
100 days. I mean, they don't have any of these things. And I'm not just dunking on the airlines, but a lot of other companies have this type of like heavy fiat decay infrastructure related drag to their business.
Right. Absolutely. Absolutely. Um, okay. Shall we go to the next, go to the last one?
Yeah, I'll touch on this, and we're gonna touch on the short squeeze stuff like more and more and more. Like that might even end up being like the bulk of like one episode, especially depending on how like Jeff and I keep an eye on like the call option market because we want to check out like the gamma vega risk and like how many contracts could be going in the money. So this is definitely a topic that's going to come up. It's going to keep coming up. But the interesting thing about this chart is that when we look at this, 3 million shares short level, these are the highest peaks. We've got these two on screen that we're looking at, and then what we just saw on the last screen, and including present day where we're hanging up above the 3 million mark. And I mean, when you look at this trajectory, at the $4.20 low, life is a comedy, but wait, it gets better. That was also the low in the short interest number. But then price just kept grinding higher, even though the short interest grinded higher. And then it went to $42. Like I said, life is a comedy. But then, short interest collapsed, the price still rallied. It hung in this like 50, 45, $50 range. Short interest went back up and the stock just kept grinding higher. You know what I mean? And what you're looking at right here is a 30x move, right? I know, of course, the drawdown in .com was horrendous. I get that. But this move right here is really asymmetrical in a short period of time. That's a 30x on the equity, not on a call option, on the equity in just about, I don't know, roughly 4 years, 4.5 years based on this. So I guess I would say the takeaway point on this chart is that Saylor's been through this. You know what I mean? This 3 million like share level, like he's led through this and crushed them along the way without like having a Bitcoin development company and like perhaps the greatest asset in human history in size on his balance sheet, right? Like those are monopolistic characteristics. Whereas back then, he was kind of like fighting off bankruptcy. He was kind of, luckily he has majority voting share, so he didn't have to fight off like hostile takeovers, but that could have been on the table had he not have voting shares. And he had to keep like employees engaged through the turbulence of the stock price and how that affected everyone's net worth at the company. And then people doubted him, like we can see here, and yet he just kept grinding higher. So yeah, having large short interest in and of itself is not something to be scared of. Plus, during the darkest days of MicroStrategy's history, Saylor was able to battle back and win.
Yeah. I mean, this is something that like probably 99% of people don't know about MicroStrategy. Like they've probably seen the .com thing, but they didn't look and zoom in to what happened after.
Right.
Obviously, yeah, people were betting against them. Yeah, it's really fascinating.
And can I just throw one more thing out there before we wrap, if we can go to slide 2?
Yeah, I want to go back up there too. We can spend a little time here. I've got a couple things as well.
Sure, yeah. So what was I gonna say here? Yeah, interest rates. Now there would have been no way of knowing in February of 2021, and I did not own the stock then. I got in after the FTX collapse, when I was like, all right, where can I get more leverage towards Bitcoin? I can buy it in my corporate account. I can even like lever this up in my personal account. So let's start doing that. So I was not like, I didn't feel this move personally, is what I'm saying, but there would have been no way of knowing in February of 2021 if that was the top or not. It could have doubled from there. But the thing that is fundamentally very different about then and now, because everyone wants to call that move like a blow off top or whatever, and like that's fine. But keep in mind, you can only see those things in hindsight. But what could have been known in the moment is that interest rates were at zero. That is like an incredibly profound like part of the story. And if, for those who've been following like my volatility compression theory as it pertains to like where I think the VIX could go this year and how that's going to pertain to risk assets, one of the reasons I'm so bullish in that volatility compression idea is because rates are at the top, in my opinion, right? Powell is signaling this, that the cut is coming. It doesn't matter if it's this meeting or the next meeting. He's signaling that the cut is coming. The president of the United States said it in no uncertain terms the other day that like the little outfit that sets interest rates, yeah, they're going lower. Which again, I've been talking about for months now, how the incentive structure of the presidential election cycle is such that they want to buy votes. And the real estate guy on the other side of this trade is a low rates guy who wanted negative rates before COVID, so having rates at what I think are like the high end
The
of the
peak.
range, meaning they're not going higher, is the opposite dynamic that we had in February of 2021, where one could now, again, in hindsight, make the argument that that was a period of euphoria given the asymmetric downside risk that exists to asset prices, most notably the high beta, like high flyers, like a stock that went up by a factor of 10 in like 3 months. The asymmetric risk was just to the downside from the interest rate perspective. So I think that like really has to be in there to the story to how things could trade as a multiple of net asset value.
Yeah, 100%. It's like complete opposite. You're going into, all right, the presidential campaign has every incentive to have the economy roaring
Right, right.
into an election. And I think that's why Satoshi designed the Bitcoin having to be in an election year as well, like
Wow.
every 4 years.
I never thought about that.
Mhm. Yeah, I think that's come up a couple of times. So yeah, it's interesting. It's super interesting. The next 12 months are going to be wild. It's kind of crazy. Even just the last week from our first video, going from I don't know 1100 to 1400, and getting such great feedback. We love the feedback. Also, everyone
Yeah.
appreciate the feedback. Let us know other things you want to hear about. I know everybody's got a lot of topics, and so we try to boil down some of the feedback into some of the things that we think are most topical, and what's reasonable for where things seem to be going. So I think it's helpful to end on the slide, right? The thinking of multiple on net asset value. We'll probably keep coming back to this at all the time in terms of updates on where it's at and where it's going and where it could go. But again, 6 times trading multiple. If we think Bitcoin's going to 500,000 and it's trading at a 6 times multiple, knowing everything that we know, interest rate environment, all of that stuff, we could be looking at somewhere at a $30,000 MSTR price. So it's fun stuff. And you've got all of the short interest, all of these things, all the confluencing flywheel factors happening at the same time. Yeah, it's just a wild dynamic. So anywho, I think that's probably good. Thank you, everybody. Appreciate the time.
I thought that was just the appetizer. Aren't we like 3 more hours?
It's late. Come on.
I can talk about the potential civil war that might happen with this presidential outcome. You know what I mean? Because that's the thing. You were talking about the presidential election cycle too.
Yeah.
This is a highly, highly controversial one. So that's why I mean every lever is going to be pulled for this. QE, lowering rates, student loan forgiveness, another omnibus bill. You know, and all that stuff is bullish risk assets. But yeah, I think there might be something of a civil war in the streets in November. I'm just saying.
It's crazy. Yeah, it could be wild. And then you've got like 2 of the oldest presidential candidates ever in history. Like either it's just like totally insane. I think another thing that is just kind of an off the wall theory that I've been thinking about and quite a bit, and it's come up a few times that people ask, like, if this short squeeze happens, right, could this break things? And I think that's been an interesting thing to think about. And I think the answer to that is probably yes, which is also bullish. If you have hedge funds that are short and they're chasing their tail and they have losses that are greater than their entire balance sheet, they've got to liquidate all of their assets and sell all of their assets in order to buy MicroStrategy. And if they're upside down completely, then they're bankrupt. And if you start to have multiple of these large institutions go bankrupt, there could be some sort of like, this is going to cause a financial collapse of non-Bitcoin related entities. And the Fed may step in and bail out those hedge funds. And if they did bail out those hedge funds, that would mean they're printing more money digitally, which would be an increase in inflation, increase in liquidity, and all of that new money would then likely flow into these assets and Bitcoin related correlated assets too. It's been an interesting one to think about. It's like, would it be bad? It could be.
Yeah, I was gonna say I do think it would be bad, and I remember specifically about the GameStop ordeal that from January 26th to January 27th, there was a 70% move in the VIX.
Yeah.
And the VIX topped out. Here's the interesting part though. The VIX topped out at 40 on that day. And to put that into context, throughout all of 2022, with a new war starting with Russia and Ukraine, with oil topping out at 150 a barrel, which was like, you know, I felt pretty uneasy about oil prices. That could have been a crisis in and of itself. And the whole like tech drawdown of 2022, the VIX never once hit 40 in 2022, not even on an intraday level, but the GameStop day it closed just over 40. So to your point, the thing with GameStop there was it was the mother of all squeezes, but that was the only part of the story. But because roughly 100% of the float was sold short, it creates this dynamic, to your point, Jeff, where hedge funds had to sell Apple, Amazon, Microsoft, the real things, just in an attempt to stay solvent if they were gonna like panic sell, but it's not even like a panic sell because it comes to forced liquidation a la a margin
Right.
call
Right. Margin call.
where
Yeah.
the broker sells their Apple, Amazon, Microsoft, and that's what, sends the VIX up in a hurry.
And this stuff can happen fast, right?
Yeah.
Like so fast. I mean, if we made a jump on Bitcoin from 70 to 90, I
Yeah.
mean, it could happen so fast. And it's like you're gonna have whiplash, right? Um, and I don't think TradFi knows, right? Like I really don't think they know. I mean, they're so far behind. I mean, it's just the learning curve on Bitcoin isn't something you can just like you don't believe in it in a day. There's like a character arc. Um,
And real quick, that's why I was pushing back gently on the crowded trade concept because there's still so much bearishness out there on Bitcoin or just lack of understanding. And MicroStrategy really never gets talked about unless like Bill Miller's going on TV. So that's what I mean there
it's
in terms
illiquid.
of the
It's not crowded yet.
right, because there's
Yet.
like the population of non-believers, like if you think of the bell curve of like adoption rates, like I still think we're so early in that first part before mass adoption and then laggards.
Yeah. I think that's why, when you think about holding MicroStrategy, I think about holding it forever, right? Like my friends just had kids, and I've bought shares for them, and it's
Yeah,
like I've told them don't sell it ever, you know. um, and it's yeah, I think we're in the beginning, and the other crazy part of that I like to think about too is and this is really important actually. I'm kind of bummed I didn't bring it up earlier, but
we'll come back to it.
the um anybody that's holding MicroStrategy or holding a portfolio of assets in the future, you can take a page out of Saylor's playbook and borrow against your assets to generate cash flow in a period of time without having to sell your assets or liquidate your assets in order to live your life. So you can do literally the exact same thing that businesses do. And those, we should probably make a whole episode about this in terms of like almost kind of like wealth management, where like even with the financial infrastructure for Bitcoin is being built out right now. I don't know if you've seen, but Unchained is offering Bitcoin loans.
Yeah,
Where,
I'm gonna look into that later.
where you can use your Bitcoin as collateral for your loan. So they've got like a 40% loan to value or something like that. But you can borrow up to $250,000. Granted, the interest rate's at 15%. But if Bitcoin's growing at 30 or 40% a year, and you just really want to buy a house, but you don't want to sell your Bitcoin,
Yeah,
and you
right.
still have a job and you're getting paid in fiat cash, that's a no-brainer, right?
Right.
Like I get to leverage this capital that I have sitting here, and I don't want to sell it because I'm going to hold it for 30 years, my whole life, and I want to be able to use that money. And that financial infrastructure is fascinating, and it's going to continue to grow, and it's going to continue to. I mean, we're in year 15 of Bitcoin's history, right? Like
Right.
the next 30 years of development and infrastructure, financial infrastructure that's built around this is like mind numbing. All right. I mean, it's only going to continue to get more developed and complex, but also simple. And um, I am here for it. I'm super excited about it. But even right now, so let's just say you're there's this strategy called my uncle talks about this buy borrow die, where wealthy you can Google it. It's like a strategy where wealthy people buy assets like land, farmland, or Apple stock, and then they have these huge 50 $100 million portfolios, and then they borrow on those portfolios instead of liquidating those assets and taking a taxable event
Right.
where you have to pay capital gains tax of 15% on your long-term holds. You can take out a loan for 8%, and you just saved 8% on your entire distribution by not paying capital gains tax and just leveraging financial market infrastructure.
Right.
And that in and of itself makes me even less incentivized to sell any MicroStrategy shares into the future, because it's like, okay, if this is a long-term hold and I could borrow against it at any point in the future, yeah, it's interesting. That's the dynamics are super cool.
Yeah, and I can make this like my last piece, and then we can go ahead and wrap from there if that's cool with you. You can
Yeah,
share your last piece as well too. But there's other developments that could take place as well in terms of, I don't think anyone's talked about this yet, but like a future dividend in fiat. Not to get into like the Bitcoin maxi versus fiat minimalist, but it's like, look, here's the reality. We need cash to pay our bills. So what the dividend would allow people to do is like it reduces the incentive to sell so that they can just keep their position and just earn income from that. And all those things we're going to talk about more. But I want to close my part out by just agreeing with what you said about, like we're in this for the long term, you know what I mean? And if people have seen the Berkshire Hathaway chart that I've posted with MicroStrategy, and a pretty high number, but going out to 2050, 2060, I mean, I'm in this thing for the long haul. I think of the equity as a perpetual option, you know what I mean, on the future success of MicroStrategy. I don't think of it in the traditional like Ben Graham sense of the equity. I see this thing as like something that can have the returns of a call option that you just get to keep forever.
right.
So yeah, we're definitely in like the long-term camp, and in terms of like buying shares for your buddy's kid, I think that's a really like sweet and special way to roll out of this one.
Yeah, yeah, absolutely. It's yeah, the long-term strategy, 100%. And kind of getting to that financial infrastructure again, it's like there are going to be ways that they're going to develop a yield and generate a yield on their Bitcoin holdings. And I mean, that's a whole episode in itself too, where we can start talking about dark pools and lending and liquidity and layer twos and these things that take a ton of research. And we should probably bring people on the thing to talk about like layer twos and how all that works and
Right.
things like that too. But
And we'll try and tie together the speculative piece of it.
yeah, yeah, absolutely. Um, but yeah, I think thanks everybody for listening. This has been a lot of fun. I didn't think this one was going to be that long, but I think it is also an hour and a half or something too. So it's just the way it goes. We'll probably have some quick hitters in the future, and maybe bring some people on to chat through some topics and have some fun. And I think we owe maybe some spaces. I think we should do some spaces and chat through a couple of these things. Let
Yeah,
people ask, let
I
people ask
was
questions. Yeah.
I was throwing out Wednesday, and just real quick, the great thing about that is it's really not much prep work for
Oh
us.
no.
Like
Yeah.
the prep work is on this. We can open up the space and then just let people run with it, because they've been watching this, so now there's like a lot of reference material. So
Yeah.
yeah, we'll
100%.
and we'll talk offline for sure about like the scheduling, you know what I mean?
Cool. Awesome. Thanks everyone. Thanks for watching. Quant Bros episode 2. Peace.
Take care, friends. Until next time.
See ya.